Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Big day today with Jerome Powell giving out some warnings that the United States could feel some pain as the Fed raises interest rates to fight inflation. Powell said they will continue to raise interest rates until inflation starts to decrease, as well as until the factors that are driving up prices higher begin to fade away, even if this means an economic slowdown. Though Powell expressed confidence the ability for the economy to survive the rising interest rates without falling into a recession, he made it clear they will not budge until inflation is on its way back down towards the usual 2% annual target. Powell said restoring price stability is an unconditional need. This was an attempt by Powell to reassure the markets and businesses that the central bank is serious, aware and competent to do the job they need to do to restore order, but I am not convinced by the words of Powell. He can point to whatever cherry-picked data as positive, but the reality is that the United States is teetering on the edge of stagflation if we haven't already gone into it, and it will be near impossible for us to recover from this without a scratch. Something funny happened in the stock market. There was barely any inflow, yet the S&P 500, Nasdaq and the Dow began recovering as if things were magically fixed. It was as if investors shrugged off what Jerome said, even his announcement that the central bank is prepared to raise rates above neutral if needed in order to lower elevated prices. This alone demonstrates one thing: the markets are being fake pumped for a huge dump. Nobody is buying at these prices, at least nobody with a brain. The market react was completely fake, and I expect a rug pull, whether it happens in a couple of days or a couple of weeks. The good news that I read was that Bridgewater Associates, the largest hedge fund in the world led by Ray Dalio, opened positions on AMC and GameStop during the first quarter according to their filings with the SEC. It is really interesting to see California's largest pension fund, Bridgewater Associates, and the best hedge fund in the world, Ren Tech, all increase or open position in stocks that the media loves to label as deadbeat. If investing in AMC and GME is dumb money, would they also call the biggest and most successful organizations the same? Let's now talk about today. The Fed submitted over $1.877 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 59% of the total volume today, while dark pool trades for GameStop accounted 62% of the total volume today. AMC had a bullish day, gaining over 10%. The stock opened and had the typical volatility it has in the mornings before settling above the VWAP and resting there for pretty much the majority of the day. It was around 2 hours before markets closed that AMC began running up along with the rest of the market after Jerome Powell gave his speech. AMC ran up, closing at 12.90, above the VWAP. GameStop had a bullish day, gaining over 9%. The stock opened and ran just below 96 before it began dipping, almost reaching 91. After this, it bounced up and found support, trading horizontal for a couple of hours around 93 and 94. After Jerome Powell's speech, GameStop began moving up along with the rest of the market, closing at 100.38, above the VWAP. Come and join my Discord for more content, the link will be down in the video description. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.